All right, traders, George here, and time for a look at three of the equity futures markets here, the S&P, Dow, and the Nasdaq. The sell-off that we've had after hitting our multi-year highs in all three markets was real extreme, very steep sell-off here. Happened very quickly in terms of how far we went down. A lot of volatility associated with the move down because there was actually some pretty big moves up at points. And what's notable for the Nasdaq here, first of all, what we can do for an uptrend for 2014 action, we've broken that convincingly here, and we actually made an outside return and tested that uptrend line as resistance as we headed down. That's something to take note of, that uptrend has been broken. In terms of how far we sold off, where we bounced was interesting because it was just a bit higher than where there's a lot of trading commitment. There's actually a fair bit scattered throughout areas above this zone here, but north of 3600 it's sort of a different picture. There's a lot of trading commitment here, and with price getting this far away from the ceiling here, it's sort of impressive that the bulls put the brakes on quickly, maybe some massive short covering as well. And then this pretty big pop we had the day prior to Friday show a pretty good relief rally that left us still in the red, and then a follow through on Friday. So where that leaves us for the Nasdaq on Friday is we're just over the round number of 3,800. That's taking us over the spike of this bounce beam. There's a fair bit of trading here. About 37.85 as we break the floor there, and that can see us moving back down with price staying over 3,800. Initial resistance at about 38.60s. With 38.85 as resistance. So for the Nasdaq, what I want to see is where it finds challenges here. Certainly, if a bear trend is going to remain intact for this correction here, finding resistance at this spike here as early as 38.60 and maybe up to about 38.80s or so would be something that you would expect if the Friday high doesn't hold altogether. If we break back below 3,800, that's a sign that we'll be selling off a little bit more to about 37.85s, and through that could see us selling off quite a bit more to about 3,700 to 37.20s or so. So will the Nasdaq find resistance on a new rally to new highs here, or will it stay within the highs of Friday, break below 37.85s, and then do something below 37.20s? It really gets into a more dangerous spot where we could see a much deeper retrace, retesting the lows here and even driving down to this heavily traded area here with about 36.10 as the top line and about 34.70s as the floor, 35.60 as the spike there. Bigger picture, if the bull trend comes back, and it's not likely that the bull trend will come back quickly, it could happen, but with sell-offs this deep, the way they happen here, the probabilities that we'll see more downside. But where I will gauge that changing has already taken a step one in that direction, and over 38.85 would help the cause there quite a bit. If the bull trend really does start to get up here more and start to really retrace this sell impulse, if we start to move up and even make new highs, at some point price will hit this trend line on the bottom side, a reverse trend line touch, and that could and would happen at new structure highs most likely. It'd be very difficult for them to get it up and retest that trend line before this swing high makes it. I mean, it could happen, but you're really talking about a time issue there. But if this thing does race up enough here, and at some point maybe around 41.50s or 4,200 we come up, we could be hitting the underside of this trend line, and that could hit a reverse trend line touch at new structure highs and cause a significant sell impulse as well. So those are the things that I'm looking at to gauge the health of the Nasdaq. Over to the Dow, just so you get a look at that as well. Slightly different scenario. The Dow convincingly broke below its most heavily traded zone here, really spiked up quite a bit. It was down 460 points on Thursday at one point, recovered about 3/4 of that, and then closed up on Friday. It's into the floor here. These were the breakdowns for the short trade here, but now coming back up here over 16,325s, we're 60 points over that right now. We're starting to live within this very heavily traded zone. With the floor here holding, it suggests a trip up initially to 16,440s, and then 16.5s is the actual ceiling here. Over 16.5 is what I want to see if the bulls are present, we'll see price over 16.5s in the Dow, and that'll open things up to move up to this next key area to watch here. This is really what to watch for the Dows, if they can take over 16.5s or not. The Dow's really retraced hard against breaking down from this level, and it's in a spot now where at 1440s, will we have resistance? 500 resistance. Will that area be taken over? Yes or no? That's what I'm looking at. Breakdowns below 325s, and round number 300 here, 16,300. Back down to retest some of this structure here, and these are the key price points below. But this is the most focused area to watch right now for the health of the Dow, or lack thereof, and it's really all about these key price points right here. And then lastly, the S&P. The S&P broke down. These were the two key areas I told you guys to watch, 1880 to 1860, and then this area here, 1845s to 1830s. When we broke below this area here, it suggested a trip down. We actually poked below and lived below the floor here of 1830 a fair bit, but we recovered that. We didn't have any closes below there, so that's a bullish sign right there. We took over the top line. That's another bullish sign. We've taken over 1860 as the floor here and 1880 as the ceiling, so that's quite a bit of damage control there by the S&P, and staying over 1880, we're at 1890s now, Sunday evening, is something to watch. Now if we get, it's only 10 points lower, but if we start to trade below 1880s, that could see us driving in to test this 20-point range here. If we really remain bullish, we won't do that much at all. We'll just stay in this pocket here and just start to move up. 1922 is the first zone of resistance before moving on up. And again, we've also broken an uptrend line just like the Nasdaq, but we really haven't done a reverse trend line touch the way the Nasdaq has, and that could see the S&P coming up here and maybe tagging this dominant spike here at about 1975s as a reverse trend line touch, and then sending it back down. So certainly that would be a key upside target there if we continue to stay above these bounce beams. But if we start to break down, these are the price points to watch, this band here and this band there. If we make new lows and break back below 1830s, this 1788 spike is the most significant one going back through all of 2014, and that's really begging for a trip if we start trading below 1830s. So the Nasdaq has recovered some key levels, the S&P's recovered some key levels, and the Dow has worked its way into a key level but is still suppressed below its important ceiling. So it's been a pretty quick and strong recovery for what would be historically a pretty nasty sell-off, which would also have a probability of further downside. So it's a challenge for the market to erase that, but so far they've done a pretty good job in 2 of the 3 markets. So keep an eye on the Dow there. That's the one that's trailing its health status, but it was the one that led the market on Friday. The Nasdaq led the market down here in the sell-off. It was trailing on Friday. So we'll see what shakes out this week. Just think about the key price points. That's all you need to worry about there. We'll be covering this and other key markets more in the live room. So make sure you use the link below and get into the room at least for a free trial so you can see what's going on and get some advance warning of some of these key moves. That'll do it for now. We'll see you back in the live room.